Hi everyone, and welcome back to Stephan Livera podcast, brought to you by Bold, the best place to buy and save Bitcoin over at getbold.io. That's for the American listeners. Now, joining me today is Tankred. Tankred, I've known he's been around in the space for a while. He's worked at Lightning Labs. He was had a stint at Swan Bitcoin. Now doing a few different things, and recently came out with a wallet called StashPay. And so first of all, welcome to the show, Tankred.
Awesome, thanks for the invitation. Great to be here.
Great. So let's just kind of chat overall about where you think things are in terms of Bitcoin, Lightning, Liquid development. Just any sort of initial thoughts on where things are today.
Sure. I think we're actually in a really exciting place. I think for the longest time, when we started at Lightning Labs, like I started there January 2018. We were still on testnet. We were feeding chickens on Pollo feed. Like not much was going on. There was not much activity. The basic user experience hadn't been solved at that time, and this was before like Breez and Strike and all these other great user experiences that we have now. And I think we're in a really good place. Not only in terms of the UX, which is getting better and better. Obviously, we still have a lot of problems that we need to solve. But also what really excites me these days are things like liquidity. There's a lot of experimentation going on, especially now with Liquid. And before that, obviously LSPs and like now Fedimint as well. So we have like different ways to share UTXOs. Some of them have different trade-offs around trust, security, and privacy. But generally, I'm really excited. I think I can't remember a time where we had as many options for the medium of exchange part of Bitcoin.
The other question that to me often comes up is there enough of a market to support medium of exchange products yet? I'm curious what you think.
Yeah, that's really interesting. I've been thinking about this a lot too. And obviously we're still in the monetization phase of Bitcoin. We're still very early. This thing is still being understood by the vast majority of basically the global population. Some numbers that are always being thrown around, and I'm very skeptical of any of these numbers, is like, I guess we're at a few 100 million users holding Bitcoin. I don't know if that's true, but I think it's safe to say we're at the very beginning of this thing monetizing, of it being understood as money. And obviously we all know the different, parts of it: stored value, medium of exchange, unit of account. I think we're still ways away from unit of account, although some people think in sats already. Like I think if you go to El Salvador, you go to Bitcoin Beach, you'll have a lot more people having made that mental shift. But like in general, like when you're doing, like as I've been receiving payment in Bitcoin for my coaching business. I was like intentionally going through that pain because I knew that the tools weren't really there yet. The invoicing, the accounting, and also the connection with the wallets, like all that is still very early. But I went through it nonetheless because I wanted to like learn what are the pain points. And because I do believe, and I really fundamentally agree with Roy here, like Bitcoin is peer-to-peer money, right? It's great if we can store value in it, we can save for the long term. That's really important, especially now with really high inflation rates basically all across the world. But I think it would be more valuable for the world if we could just transact in it. And I think we still have a lot of technical problems to solve, a lot of user experience problems to solve. So but I think we're really early. And I think what really gives me optimism is those like small Bitcoin hubs, like, El Zante in El Salvador. Then there's Bitcoin Jungle in Costa Rica. There's Madeira, which I've been to several times now. You're seeing lots of, not lots, like let's say a handful of businesses, on the island accepting Bitcoin. Like we went to a pharmacy when I was there in Madeira. Like we could pay with Lightning and Bitcoin on chain and Lightning. So yeah, obviously there's still like if you're talking to the kind of on the ground, let's say the local staff who has to then get out that app or receive payment. Some of those people are still like struggling, but in general, like the tools are getting better and better. So I think we're still like, that's the part I'm actually most excited about because it has the most, it can have the most positive effects around privacy, especially like, basically having cash in a private digital form. And I think that really excites me. That's why I guess I've always been drawn to Bitcoin, because I just came in from like the privacy side.
So you mentioned some, let's say, technical issues around people being able to earn and spend Bitcoin today. What do you see as the big issues that are yet to be solved? Is it, the accounting hurdle? Is it the capital gains tax thing? Is it more of a technical hurdle? Is it, LSP fees? What would you say are the big, the big offline receive? What would you say are the big ones for you?
Obviously, depending on which jurisdiction you're in, capital gains is a huge point of friction. Like if you're in the US, obviously, theoretically, when we're at a Bitcoin conference and we're buying, like a drink, a coffee or something with Lightning, like theoretically you would have to document that. Here in Portugal, we have a similar rule around basically capital gains as Germany, where if you hold it for 12 months, anything after that is basically has zero capital gains tax. So if you have, let's say, saved over the course of 1 year, and then you can basically use that to spend, and then you don't have to think about it so much. You still have to kind of document, and the tooling still needs to be there, but like the mental burden isn't as much because you don't have to think about it. And then obviously the other extreme is places like El Salvador, where it's legal tender, and you don't even, there's like not even a time limit. It's just always tax free to spend. That for sure, I think, is a huge mental barrier for people, because especially in the US, a lot of people are, when I listen to people talk about Bitcoin in the US, they talk a lot about it more of like an asset, like especially, Michael Saylor is very known for this. And I think a lot of it has to do because of that capital gains friction. And if it weren't there, I think we'd be talking a lot about it more like people, if you talk to El Salvador, they probably see it less of an asset. They see it more as money. It's just money. And so that's definitely like on the mental side. And then obviously on the technical side, a lot of people are using custodial wallets, because traditionally there has been the liquidity challenge on the Lightning side, that if you have a non-custodial, a self-custodial Lightning wallet on your phone, you have multiple challenges there. If you're using one like Phoenix or any of these, which by the way, I love all these wallets. I use them myself. I think I have like 10 wallets on my phone that I test just to stay up to date with what people are doing. But like the big friction there is obviously liquidity, right? And also offline receive. When let's say Phoenix has kind of solved the offline receive in part, the app is able to receive a payment with a push notification, but still, if the phone actually doesn't have an internet connection, that still doesn't work. So on the offline receive part, there's still work that needs to be done on the protocol layer, and people like Matt Corella has brought a great proposal with asynchronous payments, which I believe is making LDK is making great progress on that. But in general, like that would require Bolt 12 and PTLCs and several other things, where if we're realistic, like the timeline for that to be broadly deployed is still a bit out. So that kind of leaves obviously the liquidity problem for these LSP-based wallets is, if I don't yet have a channel open to my phone between the LSP and me, I need to pay for an on-chain transaction. And this is what I basically bumped into when I was using Bitcoin to receive payments for my coaching business. Clients, like I would send them an invoice with Zaprite. I love Zaprite, by the way. Obviously, I would have to copy and paste the on-chain address, and then they could pay me, because to get paid asynchronously with this, especially with this invoicing user experience flow, on-chain works the easiest. And also, interestingly enough, because Lightning LSP-based wallets have this on-chain fee when you open a channel, but also every time you receive. If you're like a user that has is very heavy on the receiving end, like let's say most small businesses like myself, I like when I send the invoice, I tend to be more on the receiving side. So I will, every time I receive a payment, if I had used like Phoenix or Zeus or any of these LSP-based wallets, I would have to pay for not only the about 1% fee that the LSP charges me for routing, but also and liquidity, but also the on-chain transaction to splice in. So basically to add capacity to the Lightning channel between my phone and the LSP. So this is where I basically said, what problem are these apps really solving if we have to pay the on-chain transaction fee anyway every time we receive, I get it, like there's technical constraints, but like if we actually then use these tools, I personally ended up going back to on-chain because of the liquidity fee being like the 1% being added on top of the on-chain transaction fee, but also the async payment, the asynchronous offline receive part of it. So yeah, and then we can talk about Liquid SDK and StashPay and all these things later, but those are basically the fundamental barriers and pieces of friction right now that I see on the technical side.
So let's just walk that through just to make sure everyone can follow along. So as you were saying, as an example, if you use Phoenix today, typically there's a 1% inbound fee if you don't already have capacity in the channel on your side. And so basically what's happening there is they are either opening a channel to you or doing a splice transaction, which means you're going on-chain to resize your channel larger. Now, you're paying a fee for that, both the on-chain fee and obviously the liquidity fee that you're paying to async in that example. But you'd probably pay similar with Zeus and others. And so I guess what you're getting at there is this idea that, let's say you're receiving a payment for your services. If you didn't already have enough capacity, and especially if the payer doesn't already have it in Lightning, then they might be paying you on-chain, but then you're also having to take a splicing fee and an on-chain fee at that point as well, because maybe it's, especially if there's, a lot of spam in the chain and all of a sudden spam in the mempool per se, that, it's costing a lot to hit the chain. And so I guess that's kind of one thing. Now, arguably, I'm curious to get your view on this, because maybe that's like a startup problem, like once both parties have kind of built up enough of a Lightning balance and they're just kind of spending and receiving and they're staying in Lightning, they're not having to hit the chain, then maybe that's not as much of a problem. But for now, because most people are not on Lightning and Lightning native right now, because even now, a lot of Bitcoin people, they might keep their larger balances on chain, which is fair enough. They might not want to keep larger amounts in Lightning wallets or in hot wallets. But I guess that's how I'm seeing that issue, right? That it might be maybe longer term, once lots of people are on Lightning with a decent balance, on both sides, the payer and the receiver, then maybe it's not as much of an issue. But I guess to your point as well, it also matters if you are, let's say, a net payer or a net receiver. Because if you're a net receiver, or you're kind of receiving a lot more than what you're paying out, you're going to have to be continually paying a channel fee or a splicing fee or on-chain fees. And if chain fees are rising, over time, then that can also be an issue, won't it? Wouldn't that also become an issue?
100%. I mean, you touched on a lot of good points there. The one is obviously I can kind of like buy inbound liquidity, like basically to kind of speculate on my future revenue, right? I can do that with Phoenix. I can do that with other wallets, but that also has a cost, right? Because the LSP then has to allocate more capital to my channel, which obviously there's a cost to that. That capital could be allocated somewhere else, so I would have to pay a fee, which means I basically then have to consider, okay, what's going to be my revenue this year? It might fluctuate because, the business environment might change. So I may either overestimate my inbound liquidity or underestimate. So I tend to, like, in practice, have not done that. I basically have said, you know what, right now, especially the on-chain fees are still low enough so that you don't really have to care as much. But I'm definitely looking ahead. I do believe like Bitcoin will become global money, and we will have a large part of the population wanting to use it that way. And I believe on-chain fees will just not be feasible for the regular person. So the way that I think about it is like I like that Johan at Lightning Labs, he had this saying, "The chain is lava," and I love that because, like, it's like kids try to avoid the floor, and they say the floor is lava, and that's kind of how I try to think about it. Is like, how can we avoid the chain as much as possible? Like, what can we do as engineers and also as as designers and as like people building products to avoid that for users as much as possible? And while I think these like trust minimized, like 100% self-sovereign solutions are awesome, it's great that they exist, and I think it's really important that they exist, and they will always have to exist, because there's going to be certain environments where you have work in really tight constraints where you can't really trust as much. But then there's environments where you actually you might be able to leverage trust. And I think this is where solutions like Fedimint come in, where you're leveraging local trust, almost like local capital. Those, like, if you have really good relationships in your surroundings, like family and friends, that has value, and there's incentives there that basically allow you to then leverage that to share UTXO costs. So I think this, and obviously Liquid is another one that's kind of like this global federation, but I personally believe, or I suspect, that we will, as we onboard more and more people, right now we're in the very luxurious position where we don't have to care, but the moment we do have to care, we're going to be forced to make trade-offs. And especially as like, let's say you're a small business, you're a digital nomad, you're kind of bouncing around between countries. It's really unclear, okay, what's your jurisdiction? Where's your business based? And you might not yet have like a fixed, you might have like an LLC somewhere that you operate through to limit your liability, but you might not really get a bank account in that jurisdiction yet, because like, for instance, in the US, it's difficult to get a US bank account, even if you have a US entity, if you're not a US citizen, which the US is great to do business in because it's super easy to spin up an LLC, even online, within a few days. But if you're not a citizen, it's very difficult, because the banks will look at you and say, well, you know what? To us, you're basically a compliance risk. It's not worth us to take on that additional overhead. Just basically as someone who operates in an international environment, oftentimes you're forced to use fintechs like TransferWise and Revolut, and that obviously always comes with trade-offs like privacy, and then being reliant on these third parties again. So I think as we kind of move into like a high fee environment, and that's kind of the assumption I'm operating under, that like I believe we will reach that, and I think we're not that far off. Then we're going to be, some people will start using Fedimints, right? They will set up these, like, there's already a few around the world, which are kind of, it's still early, but I think we'll see more and more communities like just spin up a local community bank. Or there's going to be people that say, you know what, I'm a digital nomad. I don't really have like close ties to any certain community, but I might be fine to trust the Liquid network with my spending money for my business, right? Because if I can basically compress my fees by leveraging these trust layers, that means I can basically lower my cost burden for my business at the end of the day.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. The lead sponsor of this show is Bold. the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold Vault is a 2 of 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. Yeah, so let me add to that. I think the elephant in the room as well, we should just say, look, I think a lot of people will just use custodial, right? Not saying we like that, but that's just kind of the reality, right? So even if you think about, let's say, Lightspark, they've been doing deals with large, banks and providers in I think they did one with Mexico, with a Mexican company who has 10 million users. They did one with a company who had Brazil, with a Brazilian bank or something like this. So there'll be a lot of custodial users there. That's one element. But then, you've got Fedimint, and then you have, let's say, people who might use a liquid kind of model. And then, of course, people who can afford it, they can just use the chain or use Lightning natively, right? Which obviously that's great. We want more people to do that. But we know realistically the number of people who can realistically be either on Lightning Bank, let's say, is probably 10 to 50 million or 10 to 100 million, something in that range. And really, once we start seeing serious use of Bitcoin, of the chain, it's going to get congested, right? For now, it's whatever. At last I checked, it's 3 sats a VByte. But the next round of spam could happen, or there could be a big round of adoption, and then that's when we're going to be thrown back into this situation. I think in years gone by, maybe there was I would sense more, I'm going to say purity testing around you got to be non-custodial and you should never take any trade-offs, no KYC, no altcoins, no liquid, no anything, just do Bitcoin or Lightning. But I think what's going to happen is there'll be a bunch of people who just literally, one, cannot afford it, or the UX is not easy enough, and for that reason they're going to choose something with a trade-off, whether that's custodial, whether it's liquid, whether it's Fedimint, whether it's whether it's something, one of these trade-offs. And so I think that's just the likely evolution that the industry is going to go down.
100%. And I think it's totally fine. I have nothing against custodial solutions per se. If you're using an exchange, obviously that will have a custodial Lightning integration, which is great, because then you can withdraw to your self-custody Lightning wallet or your Fedimint or your liquid wallet, whatever your basically trust trade-off is that you're making. We need to have both the custodial on and off ramps as well as the kind of more self-sovereign options. But I think at the end of the day, I do see Bitcoin as money, and I think in order for it to be really that peer-to-peer money, it does need to be there do need to be several options for us to not have to go through a KYC entity, right? Otherwise, you just have another middleman there.
Yeah, I see. So the way I'm thinking of it then is, yes, as we rightly point out, that there are lots of exchanges today that have recently turned on Lightning, right? So whether it's Coinbase and Binance and Kraken and Bitfinex and all these other exchanges who obviously they will give you a KYC custodial Lightning account if you're willing to accept different trust trade-offs. Let's say with the Liquid Federation and the 11 or 15 functionaries or whatever. Maybe that's a different trade-off. Or maybe if you're going with Fedimint, okay, now you're trusting the guardians and the Lightning gateway of that Fedimint, but maybe you can spread some of that around. So I think there's sort of these different pathways that you can go depending on what trade-off you're going to take. And so I think that will bring up the challenge of how do you, quickly teach people these things, right? Or is it just a matter of, because if I'm thinking about what Peter McCormack would say, he was talking about this book saying, don't make me think, right? If you're thinking from a design and a user experience perspective, look, the everyday, of course, people like you and I, listeners of this podcast, we're probably more, hardcore Bitcoin ideological about it. But the average person is not going to be ideological about it. They just want an app that just works, to use the Apple sort of saying. So what does that look like? What does just works look like for us in Bitcoin and Lightning and Liquid?
Yeah, that's great that you brought that up. What you see with products like Apple, that where it kind of just works, these are heavily opinionated products. So there's a team and a set of very technical people which understand, like, basically let's say the hardcore Bitcoiners, they understand all the technical nuances, they understand all the trade-offs, but then they decide for this particular let's say user population, they say there's this archetype of user that we're going to target, and we're kind of try to design it as broad as possible to get as many people into that group. And then we're going to make really tough trade-offs and really tough decisions. And this is where I think a great product comes out. Like, the iPhone in the beginning, it didn't have buttons, and every BlackBerry user said, I don't have buttons here. But like, it turned out that was a trade-off that was really powerful because it enabled all these different user interfaces to be on this piece of glass, right? Whereas like that difficult trade-off had not been made before. And by making that trade-off, they basically opened up this completely new kind of paradigm. And that's how I see all these different solutions. Like there's companies like Fedi. They're building an awesome product. Like I'm a huge fan also of the Fedimint protocol. And I think it's a real, like, one of the biggest, I think, user experiences challenges that I see there. Like you say, it should just work. Well, if I open up the app, I don't know, there's no federation, right? There's no federation connected. So how do I start spending and receiving money? I think that's where the Breez SDK with the Liquid Federation is really interesting, because the trade-off is there. Obviously, there's a little bit more, you're just like making a different trade-off, but you have, which is a very difficult thing to accept for a lot of Bitcoiners. In the recent days, I've got a lot of pushback from people who reached out to me privately and like voiced their concerns. And I think I was trying to explain, like for the average user that, or let's say you're in Venezuela, you don't have the option to have a bank account or set up a federation, maybe even because there might not be the conditions for that. You basically might not really have the option to want to use a bank because you have very high inflation and you have a lot of corruption. So if your option is to use a liquid-based wallet or don't have an option at all, you will probably be very willing to make that trade-off. And I think there's a lot of small businesses and freelancers worldwide in these situations, which would be just so grateful and like happy to use something if they even have a decision or like an option at all, which obviously makes very difficult trade-offs.
And I mean, I could share something even there, right? I think for all the, let's say in our little Bitcoin echo chamber, it's all about only Bitcoin only, non-custodial, and kind of people kind of fight each other about how pure they can be and how hardcore they can be. But I would say the reality on the ground, if you look at random OTC peer-to-peer trader guys in different places around the world, whether that's in Dubai, whether that's in Turkey or in Lebanon or South America, a lot of these guys are just using, let's say, Binance as their quote-unquote neobank, right? Like they would just use the custodial KYC exchange as their app that quote-unquote just works, to use the saying, right? Now, we're seeing people who are trying something. So as an example, Aqua is trying to be like a liquid-based thing that kind of has Lightning swaps in and out with bolts and so on, and kind of auto swapping. We have your new one, which is StashPay. So I guess we're starting to see options that are quote unquote just works with some different trade-offs to just, a typical trader who's just using Binance or some typical, centralized KYC. Yeah,
for sure. I mean, most people don't care. Most people don't understand the difference so that they're able to care. But yeah, again, I love that all these options exist, like Aqua, like Fedimint, because at the end of the day, they all speak the same basic protocol. It's just Lightning, which bridges all these different solutions. So, and I think that's huge that we basically have global consensus around what are the rails between all these different, it's Lightning. It's just by network effect, it already is kind of settled.
Yeah. This show brought to you by Mempool.space, the world's leading Bitcoin visualizer. And now they've got an accelerator program. So if you have a transaction that you sent at a fee that was too low to get confirmed, now you can fix this with the Mempool accelerator. The way it works, you can go and search your transaction, scroll down, click accelerator, and you don't need an account. You can pay with Lightning, and then it'll show you it's now in the process of being accelerated, and then after a few minutes, it's confirmed. And so this is a great way to help you out if you are stuck. And this can happen where maybe your wallet doesn't have RBF or CPFP, or it might help you in situations where it's impractical to go and re-sign. So for example, multi-sig with keys in different locations. And thirdly, even in some Lightning scenarios, perhaps a forced close, you might not be able to use RBF. And so in this case, the Mempool accelerator can help you out. So keep it in mind, and you can find out more over at mempool.space/accelerator. And now back to the show. So one question I have for you though, then when it comes to using Liquid, because obviously let's say the main skepticism might be, look, you can't use a blockchain to scale blockchains, right? Like Liquid is eventually going to run out of chain space, or they're going to have to theoretically raise the Liquid block size, or they're going to have to try and do something like Lightning on top of Liquid. They're going to have to try to use other things, like, because, you know, Liquid will eventually hit limits too, right? And in that scenario, let's say hypothetically, there's a lot of people using Bitcoin. The chain, the chain fees are a lot higher than they are today. Is it also fair to say, look, if a lot of people are using these Liquid swap wallets, like let's say StashPay or Aqua or others out there, could Liquid get congested too? And could the fees there also make it, could that also price out a lot of
That's great that you bring it up. I've actually been thinking about the same thing, because it's kind of hilarious if you think about it. Wouldn't it be funny if Liquid kind of became the big blocker haven that where we scale basically Bitcoin on the payment side with kind of a side chain that is able to increase the block size as adoption and usage grows, and then that will allow us to kind of keep the base chain super secure and decentralized. I don't think that's a bad decision. Obviously you have these 15 functionaries.
But we should point out though, like from a capacity perspective, yes, Liquid has different trade-offs, right? It's no mining, 1 minute block times. It has slightly smaller blocks, but obviously Bitcoin has 10-minute block times. So I think it kind of works out to kind of a similar transaction capacity, right? When you're talking about transactions per 10 minutes, let's say, Bitcoin compared to Liquid, let's say. So what happens when Liquid blocks fill up?
Well, I suspect we'll see a block size increase. I think it's as simple as that, because what's so interesting is we'll see that the Bitcoin base chain, obviously we'll have these spikes, after the halving, there was it Runes or some other experiment? And there's always something going on the base chain that we just can't control, but it's almost like Liquid on top of that acts as kind of almost like a buffer. And obviously the Lightning Network, it's as a whole, also people that are already on Lightning aren't as affected by those fee spikes, unless obviously they're using an LSP wallet, but let's say you already have funds in a Fedimint or in Liquid. You're kind of buffered, you're protected from those fee spikes on the main chain. So you kind of keep your payment activity there. But yeah, I'm not so, I guess the reason I'm not so worried about these trust trade-offs in practice is because the majority of the value will still be held in on-chain multi-sig wallets, right? That if you have, or if you're I don't know how all these companies now that are holding Bitcoin, the number's obviously growing. If you have a certain amount and you need a certain level of security, you're definitely not going to hold that on Liquid, right? Or on a Fedimint. You're going to have a multi-sig solution with geographic redundancy, with multi-vendor security, with all the things that you would want for a high value, right? So at the end of the day, security is about economics. There's no one size fits all. It's about what is the value of the assets that you're trying to protect? What's the attack surface, and how would you basically play with those trade-offs?
Yeah. I think that's it. I think it will just come down to people will just have to intelligently choose trade-offs. And as you said, coming back to the sort of just works Apple kind of opinionated philosophy, I think it will come down to builders, developers, entrepreneurs in the space and investors in the space who are investing in these companies, and from a Bitcoin startup equity perspective, they will have to be opinionated. They will have to say, look, this wallet or this app is for this particular use. And, you know, for other users, other user types, look, sorry, maybe someone else can serve you, but this is for this particular use. And yeah, there's certain trade-offs you take for that. But so be it, you know. There's no free lunch. There's no perfect in this world. You kind of have to choose a trade-off that you're comfortable with. So let's talk then a bit about StashPay and just understand a bit about some of the trade-offs here. As I understand, you're using Breez SDK, the liquid version of that. Can you explain a bit about what it looks like, how it works there?
Sure. So I'm obviously still very early. I just announced that I've been, like, the last 2 years, when we met, we were both at Swan, and back then I was tasked to kind of figure out how to integrate a Lightning wallet into the Swan app. And back then I was playing with LDK and figuring out how to make a really easy to use experience, right? And while I was doing that, I was like, yeah, LDK is getting better and better. And back then also, like, obviously Greenlight came out with Breez SDK. So we had these two great options, and they were both getting better. The developer experience was getting better, the integration of like liquidity providers and all this stuff. Now we have LDK Node, which is like an even easier to kind of integrate solution. But the problem still remained. Like, even though these are getting easier and easier, the main problem with these LSP-based solutions is, and I experienced this firsthand trying to use these in my business, is with the receive capacity and having to pay an on-chain fee basically every time you receive a monthly invoice. So I was in the last 2 years basically working as a coach. So I went through this phase where I had received coaching and had gotten into personal development, and then I did a coaching a training. So, and then I was thinking, okay, who do I work with? And I ended up just wanting to work with Bitcoin founders. So the last 2 years I've been, it started off as like a side hustle, like just a thing I did for fun. But I noticed over time, I really enjoyed it. I got better at it. And then I was focusing on that for a while. And because I was basically just working with Bitcoin founders who are like comfortable with Bitcoin, obviously it was super easy to just ask for payment in Bitcoin, right? And I think this is a very unique situation, because I would ask what other business is in that situation where all their clients are only Bitcoiners. And I think it was a super unique position I was in. And then I asked myself, well, now that I have this unique position, what can I learn from it? And when I thought, well, I can just challenge myself to just be basically purely on Bitcoin. I did have a TransferWise, a Wise account for my business, but I didn't really use it because no one was paying me in dollars. So I had to do all the accounting in Bitcoin. I had to do the invoicing. And then obviously when at the end of the year, you have to declare taxes. And like, there's a bunch of steps where you have friction, and you're using basically off-the-shelf wallets that maybe more or less technical. And I was integrating all these different parts, and I noticed I was able to pull it off, but I think the average person couldn't have pulled off what I did, because if we, like we said, most people expect a solution that just works, right? And you can't expect them to jump through all these hoops to make it work. And so I just looked at, okay, what would I need for the average person to actually do what I did? And then I basically said, well, why don't I just build this product? And this is how I like the personal journey towards StashPay was like, I was basically then looking for the longest time for like a solution, like a technical solution to make it work. And when the Liquid Breez SDK came out, I was like, that's it. Because what that really solved was the liquidity piece. Instead of having to pay one on-chain transaction every time I receive an invoice, which is basically like after having that was like $100 for an on-chain transaction, right? And then obviously a 1% fee for the liquidity. So that's quite a bit that would basically cut into my profits. With the Breez SDK, they have a fee of 25 basis points. So a quarter of basically the LSP-based Lightning wallets. And you don't have the on-chain fee because you basically have the liquid on-chain fee. So the the Lightning to liquid swaps, they have two claim and lockup, so that these swaps have two liquid on-chain fees, and these are very low because they're like 12 and 17 sats or something. So in total, it's 40 sats to receive that swap on the liquid sidechain, and through the fee that you're paying for the liquidity side is 0.25%. So it's so much cheaper to receive with this architecture. And I thought, well, now I just have to figure out, now that basically I have the liquidity side and the fee side kind of figured out, how do I integrate this with an invoicing tool that allows me to not only, obviously generate the invoice on the fly, such that when I send the payment invoice to my customer, they open the email, they click the link, and then they see like a QR code that they can just pay. Like that requires a whole, like, that's workflow that I'm not involved with. I'm not standing there with the person showing them my wallet. That's something that needs to happen in the background asynchronously. And then I was thinking like, okay, well, like how's this solved, and how can this be integrated with something like a Zaprite or an accounting software? And this is where, like the Breez team has been just doing an amazing job, building this LNURL Lightning address solution, which also integrates with mobile notifications, such that when the client then pays me over Lightning, what happens is let's say what would happen with Zaprite in this case, the Zaprite backend would integrate with the Lightning address side of it, such that the client could on the fly, fetch that Bolt 11 invoice. And it would fetch it basically through the Bolt's exchange swap server. And the way that it would work is then when the client then pays that off, like whenever I might be asleep or whatever, basically the customer that wants to pay me pays that Lightning invoice. In order for my mobile wallet to trustlessly accept that swap, it does need to release the pre-image in order the payment to settle. So there is actually a point where the mobile notification wakes up my phone, it releases the pre-image, and then the payment is settled. And so basically you have a whole workflow where I still have custody of my key, like I'm owning the key on my device, but there is a workflow that allows that asynchronous payment receiving. So that whole part, it just got released by the Breez SDK. I think they released it yesterday or the day before with 0.3.0, which is like a massive lift. So kudos to the team at Breez, like that awesome work. And basically now it's my job to integrate this and also integrate that with Zaprite, and to create kind of a seamless user experience for any small business that basically expects that just work solution. And that's kind of what I'm working towards.
I see. Yeah. And so how would this compare to, say, using BtcpayServer? Right now, that's something I've run a BtcpayServer for years, and it offers a similar kind of thing where you can run a payment request and you can receive Lightning, and it will have a persistent website that the person paying you can go to and click, and they can scan it and pay it. So do you want to just contrast that? Is it just that you think this would be easier and more of a quote unquote just works solution than, let's say, setting up a BTC Pay?
I love BTC Pay. The way that I understand it, and that I've tried it, the problem I saw is like it feels very merchant focused, right? So not necessarily like freelancer focused. So it didn't really meet my needs when it came to like invoicing and accounting from like the freelancer side. I think that's where Zaprite really does a great job on focusing. If you listen to John's story, basically he was a freelancer at the time, and he was also just scratching his own itch, right? That's how Zaprite started. So yeah, like it's very freelancer focused. That's why I like Zaprite, and I think it just makes sense to integrate there first. So yeah, that versus the BtcpayServer side, but BTC Pay also doesn't, at least yet, solve the like having that easy mobile experience. They obviously just announced their BTC Pay app, which is going to be built on LDK. So you will have a similar kind of experience on the merchant side, where the merchant also has a mobile wallet where they hold a key and they're able to receive payments. And that's great. I think it's great that we have these multiple solutions. And yeah, they'll have different trade-offs and different, I guess,
Yeah.
focus
And I
on
guess,
different
to be
market
fair,
segments.
you will be kind of back to that same LSP chain fee problem if you are, let's say, receiving a lot more than you spend,
Yeah.
or you haven't already set up your channels, or you don't want to manually run the channels, which again breaks the just works kind of idea. So it will be interesting to see whether some of the liquid-based apps, wallets, and solutions just offer a different trade-off there that maybe, if you're taking larger payments, maybe a few $1,000 instead of paying 1% of that or whatever, can you take a cheaper fee by using Liquid, but with the trade-off of holding some of your balance, your spending balance, in LBTC, as an example. And then potentially there might be a pathway in the future for people who want to use, stable coins like Tether and so on, or fiat coins, that, they could use Liquid swapping things to have stable coins as well. And then maybe, because as an example, maybe the person paying you wants to pay with a stable coin, but you want to keep Bitcoin. So then you can kind of have swaps in the background that swap it all into what you want.
Yeah, absolutely. I mean, you touched on a point there with the BtcpayServer app that it still has the LSP thing with the liquidity and the on-chain fee for every payment. I believe that will be the biggest challenge there as well. I honestly think using the Breez SDK for that could also be a great solution. I mean, I'd also love to integrate BtcpayServer with StashPay to basically have a solution
to sort of
for
have it
merchants,
connected.
right?
And then you can download your accounting and tax information out of it.
Yeah. I think the way that this is how I see StashPay, I want it to be like this hub where you can connect multiple apps depending on what your small business needs are. Maybe you're a freelancer, maybe you're a merchant. I would love to talk. Basically, the way that I approach this, the MVP will basically serving my own needs as a freelancer, but then I expect customers to come up to me and say, hey, I want this feature. And this is how I want to build the product, super customer focused. If a merchant comes to me and says, hey, my coffee shop Madeira wants to use your app because we want to save fees, I'm like, great. And then I have a new customer, right? So this is how I want to grow the product. Yeah.
So in a nutshell, the app is going to let the payer see a Lightning invoice on their side that they can pay with a standard Lightning wallet or app or custodial or whatever. And then on the receiver side with StashPay, the idea is that they will receive that balance into LBTC, and in the background you're using bolts.exchange and things like that, swaps to kind of give you that functionality. But then the idea is you have a wallet that you can use to take payments from your customers with potentially lower fees than with an LSP Lightning wallet.
Exactly. And that's the key piece, the lower fees. You're obviously taking that trust trade-off with the LBTC, holding that in liquid. But the cool thing is we can really leverage the economic density of Lightning here. So the merchant, let's say, they can receive payments all day long, or the freelancer can receive a certain number of invoices. And then when they've hit a threshold of value that they might want to secure in a multi-sig wallet, they basically, let's say after a day's work, the merchant just sends it off to their cold storage wallet, or basically they pay their staff, right? And then whatever profits they have, so the free cash flow, they just rake it into the multi-sig. And this is how I see it. This is how I see it really creating value for businesses, because you could basically compress those fees by using that trust layer. But then when you're ready to basically stack your savings, you do want to put those more on a secured layer.
Right. And so the idea is this would be like a staging area or like a little receiving area, spending wallet thing. But once you've built up a bigger balance, you might flush that out into your hardware wallet or your multi-sig and more advanced security setups. But this is just to sort of get you started easily and quickly with a low fee sort of option. And so with certain trade-offs, as you said, being opinionated about, okay, take the liquid trade-off of trusting LBT. Obviously, you have to trust that you can peg it out, but there are swap providers for that, and people might be comfortable with that, and maybe they would rather that than KYC with a custodial exchange. Maybe that's the trade-off they want to take. So we'll see where things go there. So just kind of broader Lightning development, where things are going. What are you most excited about from a Lightning perspective? Like earlier, you were touching on asynchronous payments. maybe further Bolt 12 adoption, Lightning address, these kinds of things, or human readable names, which was I believe, another Matt Corallo idea that the Phoenix and Async team put into their wallet as well. What do you see as the next big things for Lightning?
I'm definitely super excited about broader Bolt 12 adoption. I think we still have a lot of work to do integrating these. Obviously, like the Breez Liquid SDK doesn't yet support Bolt 12. It would be awesome if it did, right? We have LDK supports it. Async's Phoenix obviously supports it, but we need like broad exchange adoption of it, right? If let's say, I know that I think Strike just announced that they're able to pay a Bolt 12 invoice. And that's awesome because now like basically people can stack sats into their Bolt 12 offers, right? Like that's, I think we still have like that's going to be kind of a consistent effort in order to keep pushing that in the ecosystem. I think that's a huge win. I think that's underestimated what a huge win that is to have receiver privacy in Lightning. Having the sender privacy is great because the client paying is basically has very good privacy, and that's a great property of Lightning. But also having the person being paid have better privacy is I think it's going to be a huge win just on the protocol layer. And then I think asynchronous payments is going to be later down the line. It's going to allow basically the end-to-end payment experience with full self-sovereignty with these LSP-based wallets. I haven't given up, I want to emphasize that I haven't given up on the LSP-based approach. I think it's valuable that it exists. It has a lot of different trust and security trade-offs than these kind of, let's say, UTXO sharing models. So that's why I think it's super important that we get to that end-to-end experience with asynchronous payments, with offline receive. Bolt 12 is obviously going to be an important milestone on that journey. And once we have that, I think, we really have private digital cash, And I think that's a great baseline.
Yeah, and I think at that point, a lot of the criticisms of yesteryear of, Bitcoin has high fees or it's slow, a lot of those criticisms will be sort of vanquished in a way, at least at a more technical level, using Lightning and more advanced techniques. Now, it took a few years for those things to be built out, but they are coming. So it's an interesting point. I think you do raise an interesting point as well about the contrast of LSP-based model of Lightning versus, let's say, liquid swaps model of Lightning that StashPay, Aqua, and others are going to are using. And so it'll be interesting to see where that all shakes out over time. So I think it's a good spot to finish up here. I will link in the show notes. So listeners, you can find Tankred on X, and also I'll put the link in the show notes. Tankred, thanks for joining me today.
Thanks so much. Thanks for having me.